the Hoho region. Welcome to the Tuesday edition of Market View. Coming up on the show today, the numbers don't lie. South Africa's economy has contracted by 0.3% this quarter, and the ripple effects are already on our shores. Now, economist Sanele Sibiya breaks it down for us today. How will Eswatini navigate this economic turbulence? You're going to learn about that on the show today. And then with bonuses just around the corner, it is December. The Consumer Association has a cautionary tale for everyone. Chairperson Panyaza Mdluli calls for discipline in spending as the festive season draws near. In fact, we are already in the festive season. Another story at the borders, a different kind of hustle is underway. Businesses are racing to import and export goods ahead of the holidays. Now, Business Eswatini's president, Mvuselelo Fagutse, is going to share why this year's festive season might finally see shorter delays. You do not want to miss that business news segment today. On our Enterprise Watch segment, a very interesting topic we are diving into. The future of business. Artificial intelligence, known as AI, is no longer a buzzword. It's reshaping industries. Mncedisi Bembe from Yati Studios joins us to explore how SMEs can harness its power to target customers more effectively while navigating ethical challenges. That is a candid conversation Mncedisi had with our business journalist Nelsiwe Ndlangamandla. And then finally, Sanele Sibiya returns once again to decode today's market indices, giving us the insights that matter and to, making sure that we understand the numbers of the day as we plan to invest and make smarter economic decisions. It is a changing landscape. Anyway, stay tuned. Your business day starts here. On our first story, the contraction of the South African economy by 0.3% in the third quarter of this year, as said by economists in the country, that will have an impact on Eswatini. Economist Sanele Sibiya details how Eswatini will indeed be impacted by this change.
Economists in South Africa say the agriculture sector contracted by 28.8%, contributing to a negative 0.8%, and this contribution weighed heavily on the economy of that country. Economist Sanele Sibiya details how this will impact Eswatini.
Our economy is highly integrated to that of South Africa. I mean, if you look at our trade statistics, about 60% of our imports come from South Africa, and over 80% of our exports are actually destined for the South African market. So if now we are seeing a contraction in South Africa, we should also expect that orders for Eswatini industries are actually supposed to go down a bit, probably in Q4, as the market tries to correct for those Q3 declines. So we should expect our textiles and our major exports into South Africa to experience a bit of that bump. But fortunately, we are going into Q4, which also has those Black Friday and those festive sales inbuilt into it. So we would expect that would actually give the retailers a bit of a bump, of a buffer. But when the economy of South Africa shrinks, we are expected to also see those shrinks in the Eswatini economy, given those interlinkages between the two economies.
Domestically, economic activity is forecasted to grow by 3.6% this year from 5% in 2023, before growing by a sizable 8.3% in 2025, according to the central bank. The expected moderation in 2024 is on account of high base effects in the services sector in 2023, which was an election year, coupled with a slow start in the implementation of mega projects. The expected high acceleration in economic growth in 2025 is largely accounted by construction activity earmarked for the medium term. For Market View, Nelsiwe Ndlangamandla, Vuminkosi Nzinisa, Mbabane.
As the festive season approaches, businesses have already started importing and exporting goods. Now, Business Eswatini's president, Mvuselelo Fagutse, says they are working with relevant stakeholders to ensure the time release for goods at the borders, especially in Ngwenya, is shorter.
The festive season is known for being the peak export and import season. Local businesses have already started importing and exporting goods in high volumes. This will then mean goods crossing borders will spike due to increased demand, especially for perishable goods, holiday-related items, and raw materials. Business Eswatini's President Mvuselelo Fagudze says means are in place to ensure there is no congestion at borders for local businesses.
So there's a program that's been set up between the government of Eswatini and the government of South Africa, particularly focusing on cross-border trade. And that program is run, Business Eswatini is part of that, ERS is part of that, SARS in South Africa is part of it, and the customs officials in South Africa are part of it. And in it, we seek to facilitate trade and movement of goods between the two countries, particularly the Oshuk border. And there are already certain companies that have already received special clearance not to queue at the border with their loads, because obviously there are a lot of goods that will be moving in and out of the country during the festive season. And that is also all meant to reduce the traffic at the border, particularly from a goods movement perspective, because people are also going to be moving a lot during the festive season. But I think that's done directly between the two ministries of Home Affairs, between Eswatini and South Africa. But the business sector, I think if you look at the queues in the border of trucks over the last couple of months, it's improved significantly. We had a bottleneck in the recent weeks regarding fresh produce that we could not allow to spend too much time at the border, and a meeting was held, and the partners in South Africa are very cooperative. So with ARS and Business Eswatini and the counterparts in South Africa, they met to discuss all the bottlenecks regarding the movement of fresh produce as well, to make sure that it doesn't slip and it doesn't queue for too long at the border. So those special clearances that are obtained are meant to reduce the congestion and ensure that traffic can be eased at the border for people to move freely.
The time release study states that each day about 600 trucks pass through the Ngwenya border. This number is usually higher during the festive season. For Market View, Nelson Langamandla, for Minkosi Nzinisa Mbabane.
The Consumer Association has sent an early warning to consumers to mind their spending as the festive season approaches. Now, the chairperson, Panyaza Mdluli, said they decided to issue the early warnings as some consumers will soon get their bonuses.
Consumers should be aware that this is one period of time or of the year whereby people resort to reckless spending. So all what we are saying is that consumers should not be reckless in their spending. We have just come up from Black Friday, and we have seen a number of consumers that now, through our education, we have made them aware that they should resort to responsible spending. And now we are going to December. We're already in December, and this is the festive season. We already have a number of syndicates who are actually looking towards getting the liquidity that we consumers have worked for during the year. The issues of fakata and stuff. All what we are saying is that consumers should take care of their monies, be aware of whom they interact, especially we'll be having long queues in the banks, and there will be people who want to be, all of a sudden, want to assist you. Now everybody is taking chances. Supermarkets, retailers, they are also looking at this period of which they want to maximize their profits. So basically, all what we are saying is that just compare the prices if you have time. Look carefully into those specials which all of a sudden emanates from some retailers and supermarkets. Make sure that you are careful enough to make a comparison so that at least you don't have a situation whereby you think at the back of your mind you are buying at a discounted rate, and yet you are buying at least at the very same price, or if not more.
That marks the end of our business news. We return with our Enterprise Watch segment after the break.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Welcome back and thank you for staying with us. This is Market Watch at the Tuesday edition, I beg your pardon. Artificial intelligence is now a transformative force that is shaping industries and the world of business. Now, business journalist Nelson Ndlangamandla had a candid conversation with Mncedisi Bhembe. He is from Yati Studios, and they unpacked the incredible possibilities that come with AI, especially for small and medium enterprises.
Mr. Bhembe, we are seeing a rise of the use of artificial intelligence. How can small and medium enterprises leverage on it? Because we are going to the festive season now. What are the primary ways they can use AI marketing to grow their businesses?
Okay. AI can help most SMEs with research and analytics. It's what we call smart think at Yati. So this helps the SMEs analyze customer behavior, market trends. So most SMEs have receipts and invoices from clients and receipts from their customers. So they could take that data, feed it into AI, and it will give them very good data that will help them fine-tune their marketing strategies.
What are the ethical considerations that marketers should keep in mind when using artificial intelligence? I am just thinking that there's a lot of information that belongs to consumers that is in the hands of small and medium enterprise holders.
Okay, the first one should be data privacy. The marketers should make sure each customer information is protected and used transparently. So the SMEs should let customers know how AI is used to capture their data and how it is used for personalizing their marketing. So there should be that transparency. Also, there shouldn't be any bias in an algorithm. So if you train your AI in incomplete data, so it can be sometimes biased because it will work on the data you fed it. So your marketing can be biased, and your analytics and information that you take out to the public can be biased because it's trained on skewed data.
Most small and medium enterprises, Mr. Bhembe, struggle with finding the right target market for their product. Can artificial intelligence play a part in customer targeting?
Customer targeting is about reaching the right people at the right time. So AI excels at that by analyzing data. There's valuable data from sales, website activity, from social media interactions. So the SMEs can use that data to try and reach their target customers. For example, if an SME notices that a group of customers frequently buys during sales, and what kind of products they buy during those sales, they can push that product more during that time.
What impact does artificial intelligence have, Mr. Bhembe, especially on the teams that maybe companies currently have at the moment? There are some of the tasks that are repetitive. How can it enhance the performance of a company?
Okay, for repetitive tasks, I think AI could help in scheduling cost. It could help in the whole chain, the whole marketing chain, because it would start with generating content for you, writing social media posts, posting your content, creating your visuals. So it will just do the whole task for you. So it eliminates having a lot of people doing one and the same thing. With the introduction of AI, it doesn't eliminate the person behind the job. So a lot of people were worried that AI is now going to take away their job. But what AI is doing is it's helping these creatives, these marketers, to at least get a lot done in a short space of time.
I presume there is a young person at home who has a small and medium enterprise, a small business. They are wondering, where do I start? If I have to use artificial intelligence, what would be your advice?
Okay, I think for SMEs, the first step for them it's identifying pain points for their businesses, then writing them down. So, example is is it taking too long to respond to customer queries? Are you struggling to analyze sales trends and marketing analytics? Do you want to increase customer engagement without hiring more staff? So knowing your priorities will make you choose the right tools. So when you go online, you know your pain point. So you look for an idea that will go well with your pain point. So once you get online, you start with affordable or free tools. Many AI tools are accessible and don't require large budgets or technical expertise. So you can just search. You can search for things like Google Workspace. They have AI features for their emails, for their Excel files, for their documents. So you can also find marketing tools like Canva. Canva will help you generate content, design your flyers, design your banners. Then you can publish to social media through Canva. They'll also generate your social media captions.
How important is it for an SME holder to continuously have updated information that is to be fed into the AI system?
Okay, I think they would need to train their AI on data on a daily basis, because market trends change daily, customer behavior changes daily, so all of those things need to be factored in when you update your data. So the AI is always up to speed on what's happening in your business.
Mr. Bembe, thank you so much for joining us on the show. We are hoping that small and medium enterprises will understand now the importance of incorporating artificial intelligence in their marketing.
Yeah, AI surely taking up space and occupying a lot of offices. People thought their jobs were in danger, but really we are learning that jobs are indispensable, really. We just have to, feed these systems. They always say garbage in, garbage out. You have to input something into that AI for it to further assist you. Let's go for a net break. Analyst Bia joins us for our market analysis to help us understand the indices of the day.
Sabadani ukuthi njengalokhu sivile sive sikhulume
We capped the show off by understanding the indices of the day. Markets alive with whispers of opportunity and caution today. But what do they tell us about the state of the global economy? That is the big question. Is Wall Street's hesitation a sign of looming uncertainty, or is Asia's bullish surge a beacon of resilience? And what about commodities like Brent crude? Are they signaling strength amidst volatility? Sanele Sbia joins us now. He's going to help us understand these numbers. Sanele, mixed signals across the Dow, Nikkei, and global indices, of course. What broader narrative can we draw about market sentiment, and how should investors really in Eswatini navigate these shifting tides?
Thank you, Mr. Ngumalo, and good afternoon to the viewer. So what we are looking into the markets today, basically, like you're saying, is a story of caution, while at the same time we're seeing that optimism coming into play. So as of yesterday in the US, we saw the tech sector really closing very high. We saw tech companies really doing well and posting really positive results. Gaining quite leaps and bounds in the stock in trades yesterday. That's purely because the tech sector is one of those markets that is expected to actually benefit from a Trump presidency. So if you recall, ever since November 5, the elections, the markets have been moving and shifting towards those stocks that are expected to benefit again when Trump becomes president. So that's what we're seeing happening there. And actually, at the same time, we're seeing that the Nasdaq has continued, posting record closes as of yesterday, and so did the S&P 500. So that actually lies on the background of, we just paused from the Black Friday sales and paused from Thanksgiving sales. So still the S&P 500 is still positing that growth, and with the Nasdaq showing the performance of that tech sector, Mr. Ngumalo. But there is still a bit of caution to be shown in the market, and I think that's what the Dow Jones Industrial Average is showing, in the sense that there is a lot of this uncertainty that at present we don't know where the economy is going to go. We don't know which direction President Trump is going to take the economy. So there is that bit of caution as the market drives into more, especially as we look into Friday, where we're going to see the jobs data coming out and also looking at the manufacturing indexes data coming out. But when speaking of the jobs data and inflation and the Fed's story there, the issue is we saw inflation peak a bit in November, and at the same time, there is that uncertainty that comes with the new Trump presidency. So we don't know if the Feds are going to continue being as as restrictive with monetary policy going into their meeting on the 17th and 18th of December, so sometime next week. So Friday's data is going to show us which direction the Feds are going to go. But we are seeing some dovish, we're seeing that return to the dovish tone coming from the Feds, with the Feds now cautioning that monetary policy remains restrictive, while a few months back when they started these cuts in September, they were a bit now more relaxed towards monetary policy and the restrictiveness thereon. But right now, with the inflation coming up and with the Trump tariffs, which might actually impact inflation negatively, we're seeing a return to that dovish stance. So markets are now pricing that in to see how much of a cut are we going to see on that meeting come December 17, 18. But however, the fundamentals remain positive. We've seen positive manufacturing data there. In November, manufacturing output increased by quite a number, showing that the markets are really responding very well to a Trump presidency with those expected tax cuts, which might actually further boost demand. But there is that downside with inflation coming into the fore again with the tariffs. So now moving into Europe across the pond, what we're seeing there, Europe is in somewhat of a doldrum type of situation. We know that the far left in France has actually pushed for a vote of no confidence, and we're hoping that they're going to table that tomorrow. The news and the indications are that they're going to table that vote of no confidence tomorrow. And if you recall, France has been caught in this political uncertainty, this political quagmire for quite a long time right now, ever since that snap election in July or thereabout. The CAC has just been around the 700 that 7,272 and 200 mark, and it hasn't really broken from that trends. So that vote of no confidence is the last thing that the CAC 40 needs, the traders in Paris need. But right now, another interesting thing with the whole Eurozone type of story is even Germany is actually heading into some snap elections in February after a breakdown of the coalition, which was led by Olaf Scholz there. So right now, what we're seeing happening in Europe is the only place that remains generally stable is London. However, the rest of Europe is really going into political doldrums, and we don't know what that means for the entire Eurozone, as it were. It seems there is a bit of more political uncertainty. However, with that said, there is still some positives that we are seeing coming out of the market, with the FTSE 100 moving back into the 8,300 mark, and the DAX on that 19,976 mark, just on the touch of the 20 mark, and with the CAC moving positively upwards. That's purely because of that strong manufacturing data coming out of the US, and strong manufacturing data coming out of China as well. Moving into Asia. Again, we're seeing that positiveness remaining in the market, being driven by the fact that we saw this positive data coming out of China yesterday, and American manufacturing data showing improvement. So that means we do expect some life into the economy. There is a bit of an upsurge in terms of investor confidence and both consumer confidence. So that's what we're seeing move Chinese stocks there. And at the same time, we're seeing the dollar weaken a bit. So we're seeing that shift of trades into the mainland and into Japan. And then coming into South Africa, Mr. Nxumalo, what we're seeing there is, again, there is that upsurge in terms of trades within the Johannesburg Stock Exchange. That's also benefiting on that positive news coming out of China, and also the news coming out of the US. However, traders remain cautious as we are waiting to see what the non-farm payroll data is going to tell us on Friday in terms of the health of the US economy, in terms of job creation within the US economy. Moving into commodities, what we're seeing there is, yes, gold has actually continued to be somewhat of an upsurge, relatively mute, but continuing to gain. That's purely because we're seeing a dollar lose a bit in today's markets, and we're seeing gold trying to pick up those trades. And as that currency shifts, as we're seeing that uncertainty coming into the fiscal space in the US. And then in terms of Brent crude, Brent crude remains relatively stable at $72 per barrel. That's purely because we're seeing that ceasefire deal within the Middle East, and we know that OPEC meets tomorrow, and it is expected that they might hold output a bit steady, or even if they do cut, there is that demand deficiency that markets are seeing. So it is hoped that whatever the outcome of the meeting of the OPEC meeting will be tomorrow, will stabilize oil prices. Then coming into the currencies, what we're seeing there is, the Rand gaining a bit of strength against all major currencies. That's purely because of the tariff story against, the tariff story. We've seen the US threatening tariffs against BRICS countries, and we've already seen China starting a response in terms of it banning key mineral elements exports to the US. So those ones have been banned. So we're seeing that bit of that movement in terms of that trade war already looming, and we don't know how deep it's going to get entrenched as Trump retains the presidency in January. However, the Rand closes at a much stronger position today at 1808. We can see that it's really just climbing down to that 17 mark again. Around 20 for the longest time, and also remaining very strong against the Japanese yen at 28 cents. Thank you, Mr. Nxumalo.
Thank you, Mr. Spear, for that comprehensive analysis of the indices that matter today and helping people know when to or how to or if they should invest looking at these numbers. That was Stanley Spear, our economist, helping us with the market analysis today. We have come to the end of the program. Thank you for staying with us. This has been Market View, the Tuesday edition. Have a good day.